What's going on, guys? In this video, I want to outline how you guys can make $10,000 a month trading prop firms using someone else's cash to get the leverage, to have the buying power and capital to make six figures a year. Before I get started, if you guys are interested or have thought about joining Evolution Traders, right now the price has been cut in half until the end of the year. Take advantage. That link is down in the description box below. Now, let's get into the nitty gritty of, what you came to, why you clicked on this video, because you may be thinking to yourself, well, I see all of these other people and all of these other people are claiming to make $10,000, $15,000, $20,000 a trade or a month or this, that, and the other. I'm not here to knock anyone else or say that it's not possible, but what you need to have is to treat this as a real business and have a detailed outlined business plan. You may be thinking to yourself, why would I need a business plan if this is trading? All I need to do is either buy stocks long or short stocks short and I make a bunch of money, right? Wrong. First things first is you need to have a strategy. Second thing is you need to obviously back test your strategy either, through manual documentation where you're physically going back and back testing the setup and marking down if it's a winner or a loser and how much did it win, how much did it lose, so forth and so forth. Or you guys need to trade on demo or a sim account. And I would recommend taking at least 20 trades on a demo account using the same strategy, same entry, same risk management, and then kind of getting your win rate percentage. That way, okay, my strategy gives me an edge of around 52%, or it gives me an edge of around 60 to 65%, or maybe my edge is 71% in a trending market, right? Again, as soon as you know your win rate, you can then work on your risk management, which is your risk to reward ratio. And then from there, you can start building out your business plan on how you can obtain six figures using prop firms. Now, I would definitely recommend anyone who is undercapitalized or just coming into the trading space to definitely go the prop firm route. Which two prop firms would I recommend? Number one, Top Step. Okay. The reason why I would recommend Top Step is they don't have that intraday high trailing watermark where it goes on your unrealized gains, right? If you don't understand what I'm talking about, I'll get to that in just a second. Top Step's very good. Their support team's very good. I like what they're doing in the space, in the community. I like the live webinars that they're doing each and every single day. They're bringing on traders. They have risk management coaches. They have, strategy help, this, that, and the other. I think they're very, very good at what they're doing. And that would be my number one. Number two would be Apex Trader Funding, because they run these insane deals, 90%, 80% off, where you can pick up these $50,000 combines or evaluations for like 15, 16, 17 bucks, right? Sometimes it's 20 bucks or whatever. Very, very cheap. You can have 20 of those accounts, so you can afford to kind of play them a little bit more risky. And then you can just use the actual cost of the evaluation as your risk management. So for example, if you want to run a 2% risk, 3%, 4% risk per trade and try to pass these things in a week, 3, 4, 5 trades, you can definitely do that. And your major only real risk is that initial $20 and under investment. So it's very, very good. You can take $100, get 5 accounts. The odds of you passing are probably, going to be pretty high to pass at least one of them, right? If you get 5. So I would just keep repeating that process. Now, but if you really want to kind of scale up your business and you want to kind of make, $10,000, $15,000, $20,000 a month, I would definitely recommend to stop focusing on just having one account. Stop putting all your eggs in one basket where you're taking 2 or 3 or 4 months to pass one evaluation, and where you're kind of trying to run up one $50,000 account to have $5,000 or $10,000 or $6,000 in gains, or hell, even $2,000 in gains a month. What I would personally do is go out there, buy 10 to 20 evaluations at a time, trade about 3 to 4 very aggressive, where you're risking, 2 to 3% per trade. That way, if you do pass, you're going to pass in a handful of trades. Between 3 to 5 trades, you're going to be damn near close to passing and getting funded. Take the other ones, trade them a little bit more moderately, maybe 1 to 1.5% risk per trade. And then the other ones kind of slow roll those things, 0.5 to 1% risk per trade. So if you're on a $50,000 account, I wouldn't be risking no more than $250 a trade. You know, if you want to be a little bit more aggressive, I would risk anywhere as high up to $500 or $750 a trade, because in that particular scenario, it's only going to take you about 3 to 4 trades, or about 4 to 5 trades before you pass. And if you do it the slower way, which is completely fine as well, it's probably going to take you a little bit closer to a month. No two ways are any better than the other. It all really comes down to how much money is in your pocket. If you're someone who's got a lot, like, not going to say a lot of money in your pocket, but if you're someone who your pockets are not thin, is what I'm trying to say. If you get what I'm saying, if your pockets are not thin, I would go out there and buy 10, 15, 20 evaluations and try to trade them at, you know, at least 2% risk per trade and try to pass them as quickly as possible. If you're someone whose pockets are a little bit more tight, right? You're a little bit more tight around the waistband. I would definitely maybe try to pick up 2, 3 of these accounts and then try to use maybe 0.5 or 1% risk per trade. Yes, it's going to take you longer than it is someone else. But again, if your pockets are not as fat and they're not as deep as someone else who can go out there and just, you know, spend $200, $300, $400 on 20 evaluations, then I would definitely recommend going a little bit of a slower route, right? So again, it's all about risk management. You have to treat this as a business. What is worth your return on investment? Is it worth it for you? Like, let's say, for example, you've got $20,000 of free liquid cash and it's sitting in your pockets and it's burning a hole in it. Do I agree that someone with $20,000 cash should go out there and load up their own personal brokerage and then have a chance of risking and going on tilt for a week and losing, you know, 50% of that account? Of course not. Keep that money in your pocket, but I'd go out there and spend 500, 600, 700 of it on 10, 15, 20 evaluations and try to pass multiple of them as fast as I can, risking about 2 to 2.5% per trade, right? So anywhere between $500 and $700 a trade, I'd go out there and try to pass those, and I'd take another set amount and try to pass them out on 1% per trade, and maybe take a couple of weeks to do that. But if you do have that smaller account where you do need to kind of preserve the capital that you do have, maybe you have just a, you know, a normal salaried 9 to 5 job, and you don't have that extra 20,000, 10,000 in your pocket that's burning a hole, then definitely take all the time you need to pass, because once you do get past, you're still going to reap the same benefits. So how do you make $10,000 a month? What you're going to do, you're going to trade the combines and the evaluations completely different than the way you trade your funded accounts. When you're trading evaluations, you're going to take more trade setups. You're going to be a little bit more aggressive as far as your risks and your pain tolerance. You're going to try to pass these things as fast as possible, because again, in business, time is money. And we don't want to sit here for, you know, 60, 90 days trying to pass one account when we could essentially get 5, 10 accounts passed in the next 2 to 3 months. So with that being said, once we get over into the funded stage, you are going to trade these things extremely, extremely slow and extremely conservative. So we're not going to be risking 2% per trade. Hell, we're probably not even going to be risking close to 1% a trade. If we got a $50,000 account, I want to risk no more than $100 to $150 a trade. So however many micro contracts you can afford, that's going to be into your, you know, stop loss, and take profit in what's going to fit your risk to reward ratio. If it's a 1-to-1 or 1-to-2 or whatever you want to use based on what your level of tolerance is, that's how you're going to do it. Now, I would aim to make 2 to 3% a month per account. Now, you may be thinking, again, if we go with someone like Apex, they start off with a $25,000 account. So a 2 to 3% gain on that entire account is only between $500 and $700. So you may be thinking to yourself, man, I've made $400, $500, $600 on a trade, and this guy's telling me, you know, go out there and make $700, $500 a month. That's crazy. I'm never going to make any money. That's where you're wrong. And that's where you're going to get into cycle of blowing yourself up and staying in the same hamster wheel. I'm trying to teach you to go about it the smart way, the business way, the way that's not going to take you 6 months to get one account. But also, when you do start to get these accounts, it's also going to start to bring you in that cash flow at a very, very low stress level. So for example, imagine if you had one account and you're making 2 to 3%, which is very conservative. And it's also very, you know, it's not super aggressive, but it still keeps you in that sweet spot where you shouldn't be pulling out your hair each and every single night for a bad day. You shouldn't try to be, you know, trying to make $1,000 on a trade because the mortgage is due next week on one particular account. But what it's going to do is, if you have $500 to $750 coming in per account, If you have 2 accounts, now you're looking at anywhere between $1,000 to $1,500. If you have 3 accounts, now you're looking at $1,500 to $1,000. If you have 4 accounts, you're looking at $2,000 to $2,500. Do you see what I'm getting at here? On some of these firms like Apex, you're allowed to have up to 20 accounts. So let's theoretically speak. Let's say, for example, it takes you 3 to 4 months to get 20 accounts. Hell, let's say it takes you 6 months. But in the meantime, we're making money on the 1 account, on the 2 accounts, on 3 accounts. But let's say it takes you 6 months to get 20 accounts. Let's say you aim for 2% where you make $500 a month off one $25,000 account. So do the math. If you have a $50,000 or $100,000 or $150,000, if you have a $50,000, we're going to aim to try to make $1,000 a month. If we make $1,000 a month on a $50,000 account or $500 a month on a $25,000 account, we're going to stop trading that account for the month and we're going to move to the next account, right? Now, I would definitely, once you have over 5 accounts, start working with a copy trader where you can copy your trades to multiple accounts. But do not even comment, do not even ask about a copy trader until you personally have more than 5 funded accounts. If you have under 5 funded accounts, trade them all separate, meaning that if you get a setup off the open and it aligns with your strategy, you take that setup on 1 account. If you get another setup an hour later, you take it on the 2nd account. If you get another setup later on and after lunch, you take it on the 3rd account, so forth and so forth and so forth. That's how you spread out your risk. That's how you can grow each account separately. When each account hits $500 if you're on a $25,000 account, or $1,000 if you're on a $50,000 account, you stop trading that one particular account until the end of the month. At the end of the month, you will have a portfolio balance between $5,000 and $10,000 where you can take payouts. Let's say we take half of those payouts. So if you have $5,000 spread across those $25,000 accounts, you're going to take a $2,500 payout at the end of the month. At the end of 12 months, you're looking at almost $24,000 to $30,000 a year. That's not bad extra added income. If you have multiple accounts, more accounts than that, and you're aiming for a little bit of a bigger account size where you're trying to get 2 to 3% on a $50,000 account, you then have made close to or a little bit more than $1,000 an account, and then you stop. Times that times 10 accounts, and that's $10,000, my friends. You are now taking out half of that each and every single month, and you are making close to $5,000 a month times the 12 months in a year. You're looking at over $65,000, $72,000 a year. Very, very good money. Now, how many of you can just answer this question yourself. You guys have gone through evaluations. You have to make $3,000 to pass a $50,000 account. Sometimes you guys are sitting at $1,000, $1,500, $2,000, and it's been a week or 2 weeks or 3 weeks. Imagine if you just had to do that once and you had your trades copied between multiple accounts. And that $1,000, $1,500 that you made is now $5,000 or $7,000 between 5 or 6 or 7 accounts. That's how you can get on the road to making 10,000. So how do you make 10,000? Do the math that fits right. If you want to have $50,000 accounts, you need to aim to make 2 to 3%, which is going to be at least $1,000 on that $50,000 account. You need to at least have 10 accounts. If you want to make a little bit more, imagine if you had 15 accounts, now you're looking at $15,000 a month. If you had 20 accounts, that's $20,000 a month. Again, even if you're only going to take out half to kind of protect your drawdown or protect your cushion, if you had 15 accounts that all each made $1,000 off that one parent account, or individually, if you're copy trading, maybe 2 or 3 accounts at a time. But again, the point that I'm trying to make is that if you have 10 to 15 accounts and you're pulling out half of 10,000 or 15,000, you're talking about upwards of 5 to 7.5 G's a month. So do you see how quickly that you can get to $10,000 a month to 6 figures a year without over stressing yourself and trying to catch every single trade? Some of you guys are trying to put on 15, 20 trades in a day. You guys are trying to make $1,000 a day. Guys, I'm telling you to sit back and be patient, make $1,000 a month. But just do that times 10 accounts. See, the mindset is different. You guys are doing it completely opposite. You're trying to make $10,000 or $5,000 a month on one account. What I'm telling you to do is make $500 or $1,000 a month, but scale that times 5, 10, 15 accounts. This is how we're going to get over 6 figures. This is going to be life-changing for you. take advantage of these prop firms, use them, trade them, abuse them, withdraw money, put them into a personal account, take your family on a vacation, pay some bills, get caught up, you know, put some money into retirement, put some money into a kid's college fund, do whatever you need to do. But again, this is how you can be on the road to financial freedom. If you guys want to trade with me, you guys want to learn more, and you guys want to get access to the strategies and one-on-one coaching and mentorship help and my watch list and live trading webinars and all this stuff, I have discounted the Evolution Traders community and coursework and mentorship half off until the end of the year. Definitely jump in the room. That link is down in the description box below. Also, guys, please do me a favor. I put a lot of blood, sweat, and tears into these videos. Give me a thumbs up. I'll see all of you guys on the next one.